Welcome to our recap. What a couple of days it's been. The U.S. stock market experienced a notable retreat on Friday, January 30, 2026, largely influenced by political developments and economic data. The Dow Jones Industrial Average dropped 0.28%, the S&P 500 fell 0.29%, and the Nasdaq Composite declined 0.35% in early trading, following President Trump's announcement nominating former Federal Reserve Governor Kevin Warsh to succeed Jerome Powell as Fed chair. That certainly sent a ripple through the markets. This news led to investor uncertainty regarding the future direction of U.S. monetary policy, given Warsh's historically hawkish stance, even though he recently signaled openness to rate reductions. Despite Friday's declines, both the Dow and the S&P 500 managed to close January with gains, while the Nasdaq Composite narrowly ended the month lower. The S&P 500 also closed higher for the week, but the Dow and Nasdaq concluded in the red for a third consecutive week. On the economic front, U.S. consumer confidence fell sharply in January, decreasing by 9.7 points to 84.5, marking its lowest reading since May 2014. This suggests some deep-seated worries among consumers. The U.S. trade deficit also expanded significantly in November to $56.8 billion, a jump of $27.6 billion, as imports rose and exports fell. Wholesale sales, however, saw a 1.3% increase, primarily driven by apparel, petroleum products, and computer and electrical equipment. Geopolitical concerns continued to play a role. Global shares were mixed amid ongoing U.S. tariff threats and fears of a U.S. strike on Iran. Gold prices experienced a sharp correction, tumbling over 4% to $5,115.60, while silver plummeted nearly 13% after reaching record highs the previous day. The U.S. dollar index, DXY, climbed, putting downward pressure on commodities. Now, for some company-specific highlights, always interesting to see how individual players are doing. Apple shares ended 1.3% higher on Friday after reporting strong fiscal Q1 results, driven by robust iPhone demand and momentum in high-margin services. Management did note memory chip constraints and indicated a potential shift towards prioritizing premium iPhone launches in 2026. Deckers Outdoors surged an impressive 19% following its earnings report. Talk about a good day. Verizon also saw a significant gain, adding 12% after its earnings announcement. KLA, however, dropped 15% in post-earnings trading. Microsoft shares ended 0.7% lower, following a 10% decline the previous day. Meta Platforms slipped about 3% after an earlier 10% surge on Thursday. New Gold received final court approval for its merger with Core Mining, which is expected to consolidate two North American gold producers. Moog reported record sales and EPS for its first quarter and raised its full-year guidance, signaling strength in aerospace supply chains and defense demand. LyondellBasell announced its 2025 earnings, reporting a net loss of $738 million, or $563 million excluding identified items. The company generated $2.3 billion in cash from operating activities and exceeded its cash improvement plan goal for 2025 by $200 million, targeting an additional $500 million by year-end 2026. Looking ahead, it seems we'll have more to unpack. The Federal Reserve's FOMC maintained the target range for the federal funds rate at 3.5% to 3.75% in its January 28 meeting, acknowledging solid economic activity but also elevated inflation. St. Louis Fed President Alberto Musalem expects the U.S. economy to continue growing at or above trend in 2026, with the labor market gradually cooling and inflation resuming a path toward 2% as tariff effects ebb later in the year. The next FOMC policy decision announcement is set for March 18th. Key economic data releases next week include the ISM Manufacturing PMI on Monday, December JOLTS on Tuesday, ISM Services PMI on Wednesday, and the January non-farm payrolls report on Friday. We'll also be watching for Q4 earnings from Google on Wednesday and Amazon on Thursday. Historically, February has seen the S&P 500 unchanged on average over the past 5 decades, with positive results only 54% of the time. The S&P 500 closed near 6,939 on Friday, with technical resistance around 7,000 and short-term support around 6,900. A decisive break above 7,000 with strong volume could validate the AI CapEx supercycle, while a failure to hold support at 6,800 could trigger a 10% correction.